It's right around 1 o'clock, so I do want to go ahead and get started, be respectful of everyone's time, and try and get us done right at 2:30, if not before. My name is Veronica Watson. I am the programs manager for the IDA program at IHCDA. And today's webinar will be all about the 2020 program round. However, I do want to make you aware if you are an administrator that doesn't have a 2020 grant, we have been updating a lot of the program rules so that most of the program rules are the same across all programs, especially the 2018, 19, and 2020 rounds, which are all state funded. So even if you are not a 2020 grantee, I hope you stick around just to get a review of the program and hear a little bit about some of the updates we've been making, especially at the end of the presentation. Now we have a lot of information to go through. I really did want to touch on almost everything we have in the manual, but I've got a lot of breaks throughout where I'm hoping I'll have time to stop and answer any questions that y'all post. So throughout the webinar, feel free to be posting questions about anything. This is or should be recorded, so I will be posting both the slides and the recording for this later today and hopefully have it posted to our website later this week. So if you're having troubles with audio, hopefully it's catching me and you can rewatch if needed later on. But with that, we'll go ahead and get started. So this is just a brief summary of the program. I think most of our administrators these days have been in it for at least a year, but just so you are aware and we're all on the same page, this program is all about increasing self-sufficiency of the participants through savings and through the purchase of assets. It's a fairly long-standing program. We've had it in Indiana for almost 20 years, and for most of that time it was also federally supported. However, those federal funds ended in 2016. So the last couple of years, all of the new program rounds have been strictly state funded with strictly state rules. Say that you can purchase assets through the IDA program. We usually mean 5 different types of assets. Usually education or job training, starting, expanding, or purchasing a small business, purchasing a home in Indiana, repairing a primary home in Indiana, or purchasing a vehicle specifically to help with furthering education, job training, or getting a job. And a really brief summary of how the program works. If you're ever wondering how to explain this to folks in your life or to clients, I think this is kind of a nice place to start with some easy stats. A client has to be at or below 200% of the federal poverty level. Their household has to be at that. It's not just the individual, but the individual has to have earned income. If no one else in the household has earned income, that's fine, but the actual participant that has the IDA needs to have earned income. Now they save, on average, they can save $500 a year. That is not a strict rule. They can save less or more, but it's kind of the easiest way for us to explain is at $500 per year over a 3-year time period with a match of 3 to 1. That means that they'll save $1,500 to be matched with $4,500 in state resources. And throughout the participation in the program, while they are saving and making their asset purchases, they'll need to be completing some financial literacy and asset-specific training. So the way that this webinar was formatted, again, is following the manual pretty strictly, and which was reorganized a little bit this year to really cater to those who are new to the program, so that if you are just starting out, or even if your organization has been doing it for a while, but you as an individual are new to the program, it just kind of walks you through it in a mostly chronological order. So starting with the agreement, by now you all should have received, your executive directors all should have received an agreement from IHCDA, and you should have e-signed that, and then we e-signed that, and then it's finalized. So you should have received a copy of that finalized agreement. If you do not have access to that, first ask your executive director. They should have received a copy automatically when we signed it, and if they can't find it, email us and we'll make sure that you have a copy, because that's kind of your starting point for program rules. When you're thinking of what do I need to follow first is the agreement. Anything that's in that agreement are the rules that you absolutely have to follow. Followed by the program manual that we have published, is posted on the website. The information that you've provided in your application, you'll need to stick to that as much as possible. And if you start to go away from that, you need to let us know, followed by any guidance that we put out and any other resources. Make sure that you are checking out our website. And now we're on Microsoft Teams, and so hopefully you have access to that. We post resources and update information on there as well. We try to post them on both places so that you are not cut off from information if you're only going through one or the other. But yeah, make sure that you bookmark our IDA webpage where you can find the manual, recent guidance, documents that you have to use throughout the program, resources that we've been collecting through the years. There's a lot on there, and it's almost all incredibly useful, so make sure you know how to get to there. If you have any questions about how to find that information or just any questions in general, you can email us at the IDA email address. Both myself and Vita, the analyst for the program, have access to that, so one or the other will respond to you, usually within a couple of days. If you have any questions related to claims, which I'll be covering later, you'll want to email our claims department. We have very limited access to our claims system. I can walk you through it and explain how it works, but helping you through any issues or answering questions about when a claim might be approved, we don't really have access to that. So you'll need to work with our claims department on anything related to that. So now that you have your agreement completed, the next thing that you want to do is make sure everything is properly set up with your banking partner. Now, if you're a returning administrator, you most likely already have a banking partner that you've been using and that you'll plan to continue to use. If you are new to the program or your agency is new to the program, this is going to be one of the top things you need to get done pretty quickly. Our financial institutions are really critical partners in this program. They're going to work with you to make sure everything's set up correctly. They're going to work with your participants while they set up their IDA accounts. They'll help make sure the accounts are managed properly. And in some cases, our administrators use our banking partners to provide some of the financial education. So they can provide a pretty critical support in this program. So you'll want to make sure that you're banking with someone that you work well with, that understands and supports the program. Now this year we did things a little bit differently. We had you identify your banking partner in your application, and we are actually going to send their MOAs that we have with every bank to them directly. Normally we would give you the copy and you would have to take care of it, but we found that we want to have a slightly more closer relationship with the banking partners, so that if there are any issues either with a participant or if there's issues going on at your agency, that we are easily able to step in and help smooth things over so that clients don't necessarily feel that if they don't need to. So we will either be emailing you, or maybe we've already emailed you. I know Vita's been working pretty hard on this, and I'm not sure exactly where we're at in the process, but we'll be confirming the information that you sent us in your application to make sure the contact information you gave us is still what we need to have, and then we'll be emailing your bank directly, same as we did with you with your grant agreement. We'll be emailing them so that they can e-sign the MOA. And then same as your agreement, once it's finalized, we can give copies to everyone that needs it. And so I made a note at the bottom where, like I said, we're going to try and form slightly closer relationships with our banking partners. In the next couple of months, we're collecting to make sure we have up-to-date contact information, making sure that they have our updated contact information. We recently ran into an issue where a bank was still trying to contact my predecessor, Brian, who hasn't been around in almost 2 years. So we want to make sure that that kind of an issue doesn't happen, and we want to make sure that everyone knows who they need to contact, both at the bank and at the state. So the MOA is a really important document. As I mentioned, sometimes we run into issues with either clients, or if an administrator ends up having to close or fold, we sometimes have to step in to make sure all of their accounts are properly closed out or transferred in some cases. So that's why we have the agreement with the bank. It covers the entire term that is covered by your agreement. So right now that's a 4-year term. And your bank only needs to sign one MOA if they're working with multiple administrators. I know that some of our banks work with 2, 3, maybe even 4 administrators. In that case, they only need to sign one, but they do need to sign a new one every year that covers the term of the current program round. Now, most of our administrators work with just one bank where they have both IDAs and they have all of their administrative funds all in one financial institution. But we have started to get questions about administrators wanting to work with multiple banks. This is not something that we encourage because it can make things kind of complicated. And when we're dealing with funding, making things complicated is not always great. But we can see some of the positive arguments or the reasons why administrators might want to work with multiple banks. You know, having multiple partners at your disposal in the community is always a positive thing, or perhaps this might increase access to banking that your participants don't have at the moment. So if there's a good reason for it, we can definitely work with you on that. So the manual has been updated to include information about how to best go about that. But if that's something that you're interested in and it's new to you, feel free to reach out to us so we can walk you through that and make sure that it's set up in as responsible a way as possible. Now, one of the first things that you'll need to do with your banking partner once that MOA has been signed and everything is ready to go is make sure that you have 2 accounts set up for your agency. Now, this is even before we get to your participant savings accounts. You'll need to make sure that you have 2 different accounts set up for this program. You'll need to have one for your administrative funds, and you'll need to have one for the match funds that you are basically acting to pass through for. They should never go into any one account. They're completely separate. The admin funds are completely yours. The match funds are completely not yours. They are the participants' funds. But we do require that you have the match account set up. Otherwise, we would need to collect the account information for every single individual participant that you work with in order to get them their match, which is just not feasible and definitely not efficient. So when we give you match for multiple participants, it's only ever going to go into one account, and from there is where you will give the match to the individual participant match accounts. Now, the holding account should be just for IDA. The admin account does not need to be so restrictive. I know a lot of our agencies have multiple grants going with IHCDA. You might have CSBG, you might have HOME or CDBG, you might have ESG. There's a whole host of grants that we run out of our agency. And I know for a lot of those, you'll use the same bank account to run those funds through. And you can do the same thing. And really, in most cases, you should do that, use that same account that you use for any other grant award, you should use as your admin for IDA. So that doesn't need to be a completely separate account for IDA, but the holding account, the match holding account, does need to be. Now, when you are making claims for match and for admin funds, you're going to be doing that through IHCDA Online. So that's the next place that you'll need to get set up. You'll need to set up with your banking partner, get your accounts open, and then once they're open, you'll need to make sure everything is correct in IHCDA Online. Now, we do have a guide to IHCDA Online on our IDA webpage. There's also a partner manual for IHCDA Online on how to get set up. If you're a completely new agency to IHCDA, you'll need to register your entire agency as well as an individual account for yourself. If your agency is returning but you are new to IDA, or you need access to the claims system and you've never had that before, you'll need to set up your own individual account and then request access to your agency's grant information. And we do ask in our claims department, that every individual that has access to the claims system, which shouldn't be very many, I'm thinking maybe 2 or 3 at most per agency, they should each have their own account. It's really not great to have just a general info at email that has its own account and everyone has access to it. And that is so that if there is any, let's say, funny business that someone decides to do, that way we can trace it back to that one individual rather than getting your whole agency into trouble. So that's an internal control that we request that everyone does. So make sure that in the next couple of days or weeks, if you haven't already, that you get registered into IHCDA Online. And again, if you have issues with that system, you'll need to contact our claims department because we don't have access to it. That's necessary to assist you. And I will stop here and say, for those of you who have 2020 awards, I'll send this out in an email. But if you do already have access to IHCDA Online and to your IDA awards in that system, you might notice, I believe your 2020 award should be listed there with its match money, but it's going to take a couple more days, if not a week or 2, before we get your admin money there. There's been a slight delay and some bugs that we're working through right now. So we will be getting you access to your admin money as quickly as possible. It shouldn't take more than 2 I'm hoping really a couple of days. But the match money, I believe, is listed there, and you should have access to that. So if you have any accounts already open that need to be matched, you can go ahead and start doing that. And then the final system and final setup that you'll need to do is Outcome Tracker. This is the client tracking system that we use in IDA, where you'll enter in all of your clients and their demographic and savings information. The URL for that system is on here. And if you are completely new to IDA, you will need to get access to this system. You'll need to set up an account and then request that we give you admin access for your agency. Now we're limiting that usually to just, I think right now we're at 2 people per agency, if not less, because we have a limited number of accounts that we can give admin access to. So don't think that you can get 5 people on here. This is maybe where you do want to have an info@ email attached to this. But it's really important that you get set up in here as quickly as possible so that you're able to enter in client information as you go, rather than having to wait a couple of years and then try to fill in all of the old information. I think some of our agencies are having to deal with that from older awards, and I can't imagine it's a lot of fun. So I encourage you to get set up in here as soon as possible and start loading in the information as you need. So any questions on any of the initial setup information that I have covered so far? I imagine I'll probably have a lot of questions about Outcome Tracker. It's a system that we continue to evolve our understanding of. There is a video webinar on Outcome Tracker on our website. So if you are new to the system, I encourage you to watch that. And then we will be doing an updated training in the next couple of months, if not 2 trainings, to cover everything that you'll need to be entering into that system. But all right, seeing no questions so far. So the next step, you've got everything set up. You're in the system, your banking partners ready to go. Hopefully the next thing that you'll need to work on, or that you'll have to work on, is that you've got some people that are interested in the program and you think that they might be eligible. So what do you need to do with that? Well, of course, the first thing you'll need to do with anyone that's interested in the program is have them apply and determine whether or not they are eligible and ready for the IDA program. So this is a brief overview of what all goes into that. You'll need to accept their application, determine if they're eligible or not, approve their application, hopefully, if they are in a good spot to be in the IDA program, get their accounts set up, and then plan their training. So when determining whether or not someone is eligible, these are the things that you will need to be checking to see if they can participate in the program. So again, their household needs to be at or below 200% of the federal poverty level using the most recent federal guidelines. So right now we are on 2020 guidelines. So even if you have a 2018 account that you are opening today, you would use the 2020 guidelines, you wouldn't use the 2018 guidelines. And so next year, even if you have to wait and maybe open a 2020 account in March of 2021, usually by then the new guidelines have come out, so you would be using the 2021 poverty guidelines. Now the participant will have to have earned income in order to participate in the program. They need to be a resident of Indiana with a social security number. They need to have never had an IDA before, either as an individual or as a household. And any additional requirements that you all set, they'll need to meet those as well. I don't think many of our administrators set specific requirements, other than I know some of you keep to pretty strict boundaries that you work in. So, you know, if someone comes from outside of your territory and you really don't accept anyone outside of your territory, that would be an eligibility criteria that they wouldn't meet. But for the most part, I recommend sticking to our requirements and not adding too many others to make things even more difficult for your participants. So here are the 2020 income limits. As soon as we get word that these get updated, we will let you know early next year, and we'll update the income calculation worksheet that you need to use. We'll try to get that updated as quickly as possible. I know I get requests to update that usually before I get to it. I'm trying to be better about that. So hopefully next year that will be updated pretty quickly so that you can continue to to use this. What's nice about using the most recent guidelines is for the last couple of years they've been increasing. So it's really to your benefit and to your participants' benefit to use the absolutely most recent guidelines, because it'll give them a little extra wiggle room in terms of income eligibility. And then in terms of what makes up a household, make sure that you are checking out our manual. We give a couple of examples of what we would consider a household versus not a household. It's not a very strict rule. I usually say base it on taxes. If someone is claimed as being one household on their taxes, usually, especially when it comes to dependents, that's how I usually go by, but it can really vary a little bit depending on the specific situation of each participant and their family. Now, earned income, we follow the definition as set by the IRS, and really it's just anything that is taxable. And we provide examples of what we consider earned versus not earned in the manual. And I'll point out that even though someone has unearned income, if they receive something like Social Security or similar, that doesn't automatically disqualify them from the program. It just can't be their only source of income. They need to have at least one source of earned income that can support their savings for IDA. Now, when you are determining eligibility, you'll need to collect an application from them. Right now, the rule is within 30 days. Everything needs to be collected within 30 days to be considered one complete application. However, I believe that has been extended by our guidance that we sent out a couple months ago. So again, I highly encourage you to check out our website, look for the section towards the bottom of the page that has IDA guidance, and specifically the guidance that relates to COVID. We have switched these rules a little bit. We've loosened them a little bit to make it a little bit easier for y'all to deal with the challenges that we're all facing with COVID. But in general, what you'll need to collect for a normal application is their income documentation, documentation validating their state residency, documentation for their Social Security number. There's an affidavit that they have to sign stating that neither they nor anyone in their household has ever had an IDA previously, and then their credit score, which will help you show if they're kind of in a good place to take on an extra savings program. And it's also a great thing for you to pull at the end of the program and compare and see if their participation had an impact on their credit score. And I will say for all of this is all point in time eligibility considerations. So right now, if they are income eligible, but that changes a year into their participation, that doesn't matter. They were made eligible at the beginning, then they stay eligible based on income. What is not point in time specific, the one thing is their state residency. If an individual starts an IDA here in Indiana but moves, they are automatically terminated from our program. We cannot support them outside of the state. So you would need to close their accounts and return their funds to them and match funds to us. But income, it's fine if it changes, which I know a lot of times it can, and that's a positive thing. We don't want to penalize anyone for that. Now, all that has been focused on eligibility, but I have mentioned a couple of times if a participant is ready for the program. Because we have the rule and because it's in legislation that only one IDA can be open per household, the way that has been interpreted at our agency is ever. Which can be a little bit frustrating for us to deal with our participants, but that's how it's been interpreted, and we got to stick with it. So that means that if a participant had an IDA in the past, they cannot open an IDA now. Likewise, if they are married to someone that had an IDA in the past, they cannot open an IDA, that their spouse cannot open an IDA at any time in the future while they are still considered a part of the same household. So it's really, really, really important that you are working with participants that are not only eligible, but that they're ready to take on the IDA program, because it's the most disappointing if someone starts, then figures out now is not a good point in their life to do something like this, and then they end up having to leave, and then that's it. They can't do IDA again. It's very unlike other programs where if they start it, it doesn't work out, they can always come back. That's not the case for IDA. So you'll really want to make sure not only is someone technically eligible, but also want to make sure they just in a good spot to do this. And if not, hopefully, you can form a relationship with them a little bit and encourage them to maybe wait a little while and reapply when they are at a better point in their life to take on this extra responsibility, because the last thing we want to do is set someone up for failure and then completely cut them off from this resource and cut off anyone in their family from this resource in the future. And we do have an assessment tool that we came up with a couple years ago that is in a folder on our IDA webpage. So once you have determined whether or not someone is eligible, you'll need to send the notification within 7 days in their application. You'll need to let them know whether or not they're eligible and in the program, or if they're eligible, put on a waiting list, or if they're eligible but you're denying their application, or if they're not eligible, or if they're just like not eligible whatsoever. And you'll need to, if for those last two, you'll need to provide the reasons why, basically, so that they have a foundation. If they need to appeal, they need that information to make their argument. So a wait list, if you decide to put someone on a wait list, they can only be on there for 6 months using their current application bills. If they are on that wait list beyond that 6 months, you'll need to collect any of that time-sensitive information again. The big one for that would be income, to see if their income has changed at all. And then if denied, an applicant does have an opportunity to appeal. We provide that appeals process in our manual. I believe the first appeal is to you, and then the second appeal, if you stand by your decision and they still do not agree with that decision, they can appeal to us at IHCDA. Now, hopefully you're approving most, if not all, of the folks that apply. It's always sad to have to deny someone that would otherwise maybe be a good fit for the program. But if you do approve them, the first thing you'll want to work on with them is the savings plan agreement. This is a really important document for both you and your participant. It lays out some of the program rules and lays out the responsibilities that both they and you have when going through this program. So you'll want it signed. I believe you'll even need a witness for both the participant signature and your signature. And once it's finalized, you can keep the original, but they will need a copy so that they can refer back to that, and they have a resource to be aware of what they need to be doing for the next couple of years, and what they can expect you to do for them. Okay, so then once you do the savings plan agreement, we're going to go into setting up their accounts. But I see I have a question asking about if someone moves to another state. So that's a good question. So we can only support a client in this program as long as they are living in and are an Indiana resident. If they are moving and end up wanting to purchase a house out of state, that's not something that we can support with state funds. We want to be able to help everyone we can, but these are state funds and they're really meant for Indiana residents. So if you are working with someone in the IDA program and it turns out that they end up needing to move partway through their participation, you're going to consider them a non-graduate. And we'll go a little bit more into more detail on that later, but basically that just means they are automatically terminated from the program. Any money that they have saved gets returned to them. That's their money. They get to keep it, and they'll get to do whatever they wish to with it. And then any money that has been collected for their match over time for that savings will then get returned to the state. And that should happen pretty quickly. We try to get, if accounts need to be closed, we encourage you to close those as soon as possible so that we don't have mystery accounts popping up 10 years later, because unfortunately that happens sometimes, and it is a hassle for us to deal with and can be really disappointing for a participant if they were unaware that they're really not allowed to use their accounts anymore. But like I said, we'll get into closing accounts and what that all takes in a couple of slides. But you signed a savings plan agreement with your participant. They hopefully know what they need to be doing. You know what you need to be doing. And the first thing that you need to be doing is helping them get their bank accounts open. So you have already opened up 2 of your own accounts for your agency, or perhaps you're opening one account for the holding and then securing another, your normal admin account for your admin funds. Now each participant that you work with will need to have 2 of their own accounts. One will be for savings for what they put into the program, that $1,500 max. And then the other account will be matched. That will be state funds that we provide that to match what they're saving over time. Now these accounts are jointly owned by the participant and the IDA administrator, the organization. Please don't put an individual's name as a joint owner of a participant's program. We had one organization do that, and when that staff member left, it made it incredibly difficult to deal with those accounts. So make sure that it's the agency that is listed as the joint owner of the IDA accounts. And they should be set up as custodial accounts so that the IDA participant doesn't have direct access, but then being able to deposit. They should not withdraw without your permission using the forms that we provide for the IDA program. Specifically the account withdrawal form. Anytime that a participant wants to make a withdrawal from their savings and match accounts, which usually should happen at the same time. You shouldn't be pulling from one or the other than in an emergency situation. But for most purchases, most withdrawals, you'll want to withdraw from both funds at the same time, and you as the administrator will need to approve that using the account withdrawal form, and your bank will need to know to only accept that when they release funds and not to release funds for using any other form or any other situation. So again, it's really important that you're working closely with your banking partner and that they understand the program. So once the accounts are set up, you'll need to open up their savings account with a $25 deposit. And then moving forward, deposits can either be made by them either in person, or if you want to set up a direct deposit from their employer or from another account, you can go ahead and do so. But again, their access to these accounts need to be restricted really only to deposits. They shouldn't be able to access their accounts from like an ATM or using online banking so they can transfer money around. Again, this program involves state funds, so we need to be as responsible as possible with how those funds are used and making sure they're only being used for allowable purposes. So I want to try and hopefully make this as clear as possible. I think we sometimes get a little bit caught up with this, especially those who are new to the program. Your agreement for IDA is for a 4-year term. Your agreement will be active and available for you. This program, this round is active and available to until June 30th, 2024. It's a 4-year term. We still call this a 3-year program from the participant's perspective. It used to be a 3-year program. The last 2 rounds were 3 years. Even with your agreement terms, we extended it to 4 years because we realized that agencies might have issues if they were telling their participants it's a 3-year program and they have 3 years to save and get matched. That leaves you absolutely no time on the front end to get people signed up and through the application process, or on the back end to get them through the asset purchase and account closeout process. Because there are situations where you have someone who's saving and you're getting the match and they finish all of that, they're done with their savings responsibilities, but they might need a little extra time to finalize their purchase. You know, buying a house can sometimes take a little while. Finding a good car might take a little while. If they're using this for education, they might want to use the funds for another semester or 2 if it's still within the program term, and they're allowed to do that. We want to give them that time and give you that time to work through that with them. So encourage you to tell your participants it's about a 3-year program. It also makes the math easy. They're still saving $500 per year, getting matched at $1,500 a year. So at the very end of it, they'll have a total of $6,000 to use. Now that is just to give as an example. Really, when it comes down to it, you and your participants have until June 30th, 2024 to complete the program. However, in whatever form that takes. If you have someone who completes their savings and gets matched in 2 years, they can take those next 2 years to do the purchases. Or if they go all the way up until, let's say, like, I don't know, April 2024, and they can get their purchase done in a month or 2, then they can do that. However the timing works for you and your participant, you have that flexibility. There's nothing that says you have to do it in exactly 3 years and do it $500 each year. That's just an example to make it as easy as possible to understand. But what isn't flexible is that June 30th, 2024 deadline. Everything needs to be done by then. Assets purchased, bank accounts closed. So make sure that your participants are aware of that. So I think we have run into issues in the past where we tell participants that's a 3-year program, but they're starting maybe 2 or 3 years into the agreement term, which really limits their participation to 1 or 2 years, which is fine if you can make that work with all the other program rules. We just want to make sure that your participant understands the true restrictions that they have with the timing. One of those restrictions is that we can only provide match of up to $2,400 per participant in one program year. So your participant can save up to $800 in a year and have that completely matched. If they save up to like $900 or more, that last $100 cannot be matched until the next program year starts, and that is July 1. I think this could be interpreted to say every 12 months that limit is in place, and so you have to wait every 12 months from whenever your participant hit that max limit. But to me, I think that's be very confusing to try and figure out, and incredibly limiting, because some of our participants do want to and can complete the program in less than a year. So we're trying to make that as flexible for them as possible. So we follow it by program year. So no matter when your participant opens up their account and starts saving, they can save up to that 800 and get it matched. They can save more than 800. That's totally fine. They just won't be matched whatever they've saved above the 800 until July 1. At this point, it'll be July 1, 2021. So keep that in mind. So right now, anyone that you are opening an account for, they'll have almost an entire year before they can have more than $2,400 received in match. However, anyone that you open in, let's say like March or April of next year, they'll only have to wait a couple of months to get the rest of that match. So we're trying to give you guys as much flexibility with this as possible. If this is an issue with you and your participants, I know 1 or 2 administrators have voiced concerns about this, but I think we've actually worked it through with them, worked through some ways that they can basically work around this rule, or really work with this rule in a way that most benefits their clients, so their clients can get the full match available to them. So if you are an administrator that is struggling with this, if you have participants that struggle with this, please reach out to us, let us know so we can talk through some options with you. Now we require and also highly recommend that you set your claims schedule, your match claims schedule, to be at least quarterly, if not monthly. This is incredibly important. I've received some emails and some calls from administrators recently where participants have been saving. The administrator maybe hasn't been keeping up with the match in the last couple of months, and then the participant, their closing date on a house is next week, and I just submitted the match claim today, and will it arrive in the match account in time? Sometimes it will, sometimes it won't. But the best way that you have to avoid a scheduling conflict like that is making sure that you are matching your participant savings over time, that you're not waiting until the very end when they need the money, because there might be an issue. Right now, we are running into delays with some of our claims because our claims department and our accounting department are having to deal with the rental assistance program that we are running. There's a state rental assistance program that was set up in response to COVID. It's a new program that had to be built from the ground up, and of course a lot of people are interested in it. There's a lot of action going on in that program, and it's taking a lot of our attention as an agency, so that has been delaying some of our claims on here. So as soon as you can with your participants, you want to be matching what they're saving so that you're less likely to run into that issue. So do it at least quarterly. That was an agreement that was in your agreement that you signed and said that you would follow. But if you can do it maybe even monthly, that might be even more helpful for you and your participants. So any questions on any of that information? All right, seeing none, hopefully that means everything is making sense and you feel confident and comfortable with what you're doing so far. So you set up the accounts, you're set up in IHCDAONLINE, your participants are saving, so you'll need to start making those match claims and maybe even some admin claims. And how exactly do you do that? So for your match claims, which you'll again need to be doing at least quarterly, we have a specific document that you need to use. It's called the Match Claims Tool. We provide this on the IDA webpage. And on that tool, you're going to list every single participant that you're working with in a program round. You'll show the amount that they've been depositing and any match that they are receiving from that particular claim. And then if you'd like, if you want to also upload any additional supporting documentation, like there's some deposit forms from their bank account, that's totally fine, but bare minimum is that match claims tool. And again, it needs to show everyone in this program round. So even if you are making a claim for one participant, but you have 3 accounts opened for that program round, all 3 need to be listed on that match claims tool. And then for administrative budgets, so this is new. I'm trying to put like big, exciting new things in red for those of you who are returning to IDA. We have expanded our administrative budget so that you still have that base $500 admin budget, and that is going to work the same exact way that it always has, or at least has in the last couple of years. You were awarded as part of your grant $500 per account, but it is not tied to the accounts that you end up opening. So if you were awarded 5 accounts, you only end up opening 4, you'll still have access to that full $2,500 per account, or $2,500 total that you were awarded. New this year, we've added an additional $250 per account, but you will not have access to that until you start having your participants make purchases and graduate from the program. So I believe I explained this a little bit more in the next couple of slides. Yes, I do. Okay, so for the $500 general admin, the supporting documentation from that can be things like invoices, general ledgers, receipts for any supplies that you have purchased for the IDA program. So it's all reimbursement based, and it's based on any staff time that you spent on IDA, and then any materials that you've purchased for IDA, either helping a client through the process, maybe purchasing some educational materials. All of that can be claimed under this. And they should be claimed within 45 days of them occurring. In terms of the other $250 that we've added, so it's split. You will have $150 for every time that you have a participant make a first purchase, and the supporting documentation for that is going to be the asset withdrawal form. There's a new section on there, or a new place where it says first purchase, and if it's the first purchase for that participant, you're going to check it, and then you're going to turn around and submit that with the claim. So you can get the $150 for that. Now, this is limited to the amount of counts that you were awarded. So sometimes if you are awarded, let's say 10 accounts, a lot of times administrators will have to end up opening 12 accounts because of attrition. Some people end up leaving the program before they can finish it. So even if all 12 of those end up making a first purchase, you will really only have access to 10 instances of this 150, and it can only be used once per participant. So you shouldn't be submitting this more than once for each of your participants. We are starting to monitor our claims a little bit more closely, so we'll be keeping an eye out for that to make sure that we don't see someone showing up more than once for this particular admin expense. Now, the other part of the $250 is the $100 graduation incentive, and you're going to use the account closeout form as the supporting documentation. Both of these forms are forms that you are using already. We haven't changed them all that much, so hopefully this will take very little extra time on your end and get you a little bit extra money to support what you're doing for IDA. So the graduation incentive is for participants that have completed the program, made all of their asset purchases, and used at least $4,200 in match, because sometimes we do have folks that start the program that maybe make 1 or 2 purchases, and then they end up having to back out of the program with a lot of match still on the table. We wouldn't consider those eligible for this type of a claim. You really need to have participants that have used the majority of their match funds for us to consider them to be a quote successful graduate of the program. And again, it's only once per participant, and you'll only have access to the same number that you have been awarded accounts. And I can't think of a reason why you would end up graduating more people than you were originally awarded. So not the same as the one above it, but again, only claimed once per participant, and that is something that we will be monitoring to make sure that folks aren't being accidentally claimed twice. So this is new. If you have any questions about this, if you're wanting to make sure that you're doing it right, you get to the point where you have people making purchases and graduating, and you want to make sure that you're doing this correctly, feel free to reach out to us. It is new, and I imagine there might be a couple of stumbling blocks. I try to make it as simple and easy as possible while still giving you guys access to these funds. and having it be based on performance. The original $500 is not based on performance. You can only end up, there might be a situation where you only end up graduating 1 or 2 people out of a bunch of accounts that you're awarded. You still have access to the total 500 times however many accounts you were awarded. We want to give you extra funds, but have it be tied to program success. So hopefully there won't be too many hiccups, but if there are, feel free to reach out to us. Now, when you're making a claim, I highly recommend that you are referencing our guide, our IDA guide, IHCDA Online, which is listed on the IDA webpage. There's also the Partners Guide to IHCDA Online. So make sure that you have access to those. Again, if you can't find those, reach out to me and I'll make sure that you get them. Most questions that we get, especially about, how do I register or what type of claim do I need to submit, those are, I think, pretty clearly explained in those resources. And it's only if you read them and you're still unsure that I encourage you to reach out to us. Okay, I do believe I have a question on claims. So yes, the $150 and $100 is an addition to the $500. Now this is only for 2020 awards. We are not adding the $250 per account for 2018, 2019, any older program rounds. This is just a 2020 thing, and if it seems to work well, we don't have any issues come up in the next year, then I imagine, my hope, that we can continue it for any future program rounds. But total, for those of you who were given 2020 awards, you were given $750 times however many accounts you were awarded as your total admin budget, which is an increase from previous rounds. So hopefully that is something that you can appreciate and enjoy. I believe that answers the second question. Again, if you're still a little unsure about this, you want to make sure that you're understanding it. That this is it's new money, folks. It's extra money. So I imagine I can understand if you're a little startled or want to make sure you understand it. But it's new. It's on top of the $500 that you have been given previously and are now being continued to be receiving. So it's $750 is the per account admin award that you were given. Okay, so I think that answers those questions. So moving forward, so you've been working with your participant. You've set up their accounts, they have been saving, you've been making claims to match their savings, and you're getting maybe to the point where you want to start considering making a withdrawal. Well, first, what you'll need to do is make sure that your participant has completed their financial education and asset-specific training. So these are both things that need to be done within 1 year of the participant starting the program, and they need to be complete before any withdrawals can be made. Now, previously we had rules in place where they had to do like 6 to 8 hours for each of these. We have struck that from the program requirements, and that is across all program rounds. So you don't need to show that they did a certain hour or number of hours of training. You just need to show that they did whatever training you have set up for them. If you are a 2020 recipient, you had to go into some pretty deep detail on what that education looks like. And that's another thing that we'll be focusing on in the next year or two, is making sure it's getting a better understanding of what all you are doing for your financial education and your asset specific training, and really making sure that the quality is as good and it's as useful as possible. Some of the feedback we were getting from participants when we still had the hourly requirement was that it just wasn't meeting their needs. Either they already knew the information and it was a complete waste of time, or it just wasn't meeting any other needs that they had. So we want to make sure at the state level that we're focusing on meeting the needs of the participants, and that we're encouraging you and giving you as much flexibility to do that. So some of your participants might only need maybe like 1 or 2 hours of training for any particular thing, depending on what their background or their education is. Some might need that full 6 or 8 or even more to feel comfortable with their savings and with the decisions that they're making with their money and with their asset. So as much as you're able to, I encourage you to work with your participant and make sure that you're meeting whatever needs that they have based on their background and their prior knowledge. And it's the same for asset specific. So both asset specific and financial education need to be done within a year and need to be done before they make their first withdrawal. And they are separate. So you will need to show that your participant is doing two different types of training. If your participant is purchasing a home, they'll need to be going to do some sort of home buyers program. If they're doing home repair, I know a lot of administrators will set their participants at like the local Home Depot or Lowe's when they do like classes on how to do easy home repairs. I know some agencies, if they're working with participants that are going back to school, they might set up their participant to talk to the local financial aid office and talk through, what that process looks like and what the participant will need to go through to be prepared to go back to school and be able to pay for it. So again, it's up to you on figuring out what works best for you and your participants. And I highly encourage you to make sure that you're being considerate with that and you're meeting the needs of your participants as much as possible. We do have some recommended topics in our manual, so check out that chapter to see, what are the things that we encourage you to include in your education. So, assuming that your participant has turned in a full application, you have considered them, marked them as eligible. They have deposited at least $25 into their savings account when they first opened it, assuming that they have completed all of their education requirements and that they are in compliance with their savings plan agreement. They are eligible to make a withdrawal for an approved asset purchase. Now, on our manual, it should be page 38. There's a really nice table that we have set up for allowable purchases by asset type. So if you're wondering if what a participant or prospective participant wants to purchase meets the requirements of the program, I would encourage you to check out that page. To get a better understanding if what you are interested in, what they are interested in is not listed there or explained in the section, I believe, above that. Go ahead and reach out to us and we can talk through whether or not it meets the requirements of the program. But assuming that it does, you will want to make a withdrawal, as I mentioned before, from both their personal savings and their match savings accounts. So, and you'll want to do it at a rate of 3-to-1 to match the match rate. Match the match rate, that's fun. So an example is if they are going through school and they have a tuition bill of $800, you will want to withdraw $200 from their personal savings and then $600 from their match account so that you have a total of $800 to meet that $800 bill. You should never be withdrawing for an approved asset purchase. You should never withdraw from just their personal or their state match. You need to withdraw from both and withdraw at a rate of 3-to-1. In terms of steps to take, again, very important that you explain this to your participant, make sure that they are aware that they need to give you a couple of weeks, as much as possible, give you a couple of weeks advance notice before they make that purchase. Again, we have been running into issues recently where folks are scrambling, or administrators are scrambling to get their match funds all claimed so that a participant can make a purchase in the next week or two. And that is just not ideal, because if you run into issues like we're running into now with the rental assistance program, it's really hard for us to meet the needs of you and your client. And it can be frustrating because in most cases, the client should have known well in advance before they make a purchase, and they should be telling you, and you should be making sure that everything is set up in terms of the funding that they have available. So let your participants know that that's the expectation, and really kind of hammer it in as much as possible that they need to give you 2 to 4 weeks advance notice, so that you can make sure all the match requests are up to date. And so once that advance notice is given, they'll need to be collecting any of the necessary documentation for the purchase. We have a checklist, in the resources folder on our website of some of the things that they should be collecting by asset. Once they've collected all of that, they'll need to meet with you, schedule an appointment, and then meet with you to complete that asset purchase withdrawal form so that they and you can sign it. And at that meeting, they should bring any of the documentation that they have collected. And then using that form, they will go to the bank so that the funds can be dispersed in the form of a check to a third-party vendor. Funds should never be released directly to the participant. They should always be released directly to whichever vendor they are using for their asset purchase. And once the purchase is completed, they'll need to return copies of any receipts or similar documentation to you so that you have that as on hand in the files to show that the purchase was completed as expected, and then it met all the program requirements. Now, the one exception to these types of withdrawals and to withdrawing from both accounts at the same time is for an emergency withdrawal. We recognize that when a participant is saving and something happens unexpectedly in their life, such as a pandemic, they might need access to those funds for something that is not approved by the IDA program, and that's okay. I can't say that I encourage this because we really want to make sure that it is for life-altering emergencies. But if something has truly happened that is putting the participant at risk or their family at risk in some way, then we want to make sure that they have access to those funds. And so some of the examples of those situations that we would consider to be for an emergency would be to prevent eviction or foreclosure, medical care expense, paying for any critical living expenses like food or utilities. If they are struggling with any of that because of something that has happened unexpectedly in their life, then we want to make sure that their IDA funds are made available to them. And I say that unexpectedly because if it's something that they have long struggled with, then I would consider them to be not ready for the IDA program. Someone who is eligible and ready for the program should be able to cover their living expenses, if not easily, then at least without too much struggle. If they normally struggle to meet some of these expenses, then I would not consider them ready for the program. But if something changes from when they applied and they do start to struggle with this, then they can withdraw their savings. They cannot withdraw match for any of those expenses. And if they do withdraw from their savings and they want to still continue with the program, which we encourage, you want to make sure that if something happens and there's a chance that they can get everything back together in the next 12 months, encourage them to do so, work with them so they can replace those funds from their savings account in 12 months. If it goes beyond 12 months, then we really would consider them to be terminated from the program. And while that is happening, while they have made that withdrawal and they are paying it back, you should not be making any claims for savings. You should wait until they get back up to what they were originally so that their savings and match are back into the proportion that they were in originally, and then as they save more, you can start the claims over again. We always want to make sure, anytime you look at a participant's savings and match accounts, they should always be in that 3-to-1 proportion. The only time they are not in that proportion is if they have reached that max savings and they're starting to save more than $1,500. Then that 3-to-1 proportion might be a little off. But other than that, they should always be in that 3-to-1, especially right after you've made a match claim. And if they are making an emergency withdrawal, the process is the same as an asset purchase withdrawal. They just wouldn't withdraw anything from their match account. Okay, I see I've got some more questions. So for tracking training on VistaShare, I know a lot of online training courses will provide some sort of certificate. So you should collect that certificate from your participants whenever they have done an online training and use that as proof that they have finished their training. If they are doing some sort of training that doesn't automatically provide that, then I suggest that you come up with your own one-page or half-page certificate that just says, I attest that participant A completed this specific type of training, it meets the requirements of the program, signature, done. We just need to see something that is signed off by someone other than the participant that the training was complete. And then you can use that document as supporting, you can upload that document to VistaShare as your supporting documentation that they've completed the training. And then, Latanya, that's a really good question. It's something I'd like to work on. There's a question about online purchases. I know that this has been a growing need in in this program, and it is something that I would maybe like to do some sort of a a group chat, some sort of maybe get a committee together to work on this. I'm starting to see more requests for online purchases, such as a student wanting to purchase books from Amazon, or a student wanting to take an online course that is certified but can only be paid for with a credit card or a debit card. It really can't be paid for by a check. We understand that that is the way that things are going. Checks are kind of on the way out, and being able to pay for things online is growing more and more common. And we are interested in supporting that. We haven't quite figured out a way that we want to set in stone that everyone can use. Now, we have allowed for some exceptions to that particular check rule. So if you have a great need with a participant that needs to make an online purchase, reach out to us and we can talk through what are the best options for that participant and for your agency in that situation. But that's one of the reasons why I want to start talking to banks a little bit more in this next year, is actually to get their opinion as well. Their opinion, your all's opinion, maybe some of our opinions, like in our legal department, to talk through what's the best way to allow for online purchases while still limiting the access that a participant has to their account. Because ultimately the big thing is that the participant cannot have direct access to their funds. Maybe they can see with the funds that they've saved, but they should not be able to direct the funds without your approval. They should not be collecting the funds directly either. So right now, no, there's not one way to make online purchases. If that is a need for your participant, reach out to us. And if you have ideas on how to fix this issue or address this issue, please reach out. That's something that we are interested in addressing in the coming year. All right, so you have worked with your participants and they've made all of their asset purchases. They have successfully completed the program, or maybe they need to just leave the program. They're moving or something has happened in their life where they just cannot finish this program and their account needs to be closed. What do you do in those situations? Well, for a graduate, this is a kind of account closeouts that we love to see. A graduate is someone who has successfully completed their savings plan. They have received all of their match funds. They've made all the asset purchases that they could possibly make, and everything has been done by the end of your grant term. So that's, again, June 30th, 2024. They've done all that, then it is time to close their account. So there is a closeout form that we use in those situations. Similar to the asset withdrawal form, you'll need to sign it, both you and the participant, give it to the bank, and then the bank can close the account. And then the big thing is that anything that is in the graduate's personal account gets returned to them, and then anything that's left in the match account that is unused gets returned to IHCDA. And then moving forward, that graduate is no longer eligible for the IDA program. Now, another type of account closeout that we haven't talked about is reassignment. So this is when usually you're maybe within a year of an agreement term ending, and you're working with a participant and they've met all of the program rules. They were eligible, they're able to make their savings requirements, but something's happened. Maybe they had that emergency, or something, a life-altering event has occurred, and they're not going to be able to finish the program within that grant term. But you're confident that they can finish the program in the next year or two. In those situations, we do allow for a reassignment. So right now, our 2015 awards are ending. They're going to be ending September 30th. So that's that next month. If you have a 2015 award, make sure that you're closing out your accounts pretty soon. But let's say you have a participant from that award that is close to being done. Maybe they've done all of their savings, but they're just not ready to finalize their asset purchase because something had happened and it kind of pushed back. I would say COVID is a really great reason why someone might need to be reassigned. Maybe they were saving up for a house and then something happened and it made it a lot more difficult for them to buy a house in their area. In those situations, if you have a later award, so let's say you have a 2015 award, you need to reassign someone from that to a later award, and you have an open account on your 2018 award or your 2019 award, you can reassign that 2015 person to that later award. We allow that to happen once per grant period without seeking our approval. Anything beyond that one reassignment will need to be approved by us. And it's a complicated process. So I highly recommend that you try to avoid this as much as possible without, you know, kicking someone out of the program at the very end of your program term. We don't want that to happen if you can see someone graduate in another year or two if they're given that extra time. But if you do decide to move forward with this, any match funds that were collected, let's say for that 2015 participant, if you collected all their match funds from the 2015 award, that will need to be returned to us. And then if let's say you're moving it to their 2018 award, then you'll need to make a new claim on that 2018 award for the match based on what they've saved. And it's going to need to follow the new program rules. So 2015, the most a participant could get a match was 3,600. In 2018, the most they can get is 4,500. If you're switching from 2016 to 2018, the match rate's going to change. It was 4-to-1 in 2016. Now it's 3-to-1. It's been 3-to-1 since then. And then if you are reassigning someone and you have more than a year or two left on the award, you're going to have an empty slot that hopefully we would hope you would try to refill. So it's a bit complicated. We allow it as a kind of last resort option, but it's not something that you should go to if someone is just struggling a little bit in the program. See if you can help them through whatever they're struggling with before you get to this. Now, if you get to a point where reassignment, their situation is just that even reassignment couldn't help them. Maybe they're moving. Maybe they've done something that they really weren't supposed to. Or they've exceeded the award term and you don't have any extra accounts to reassign them to. So at that point, you would need to close them out as a non-graduate. And the same as a graduate, they would get any of the savings that are left in their savings account. We would get any match that is left in their match account. And moving forward, they would not be eligible for the IDA program. So in any of these situations, you're going to have to most likely repay us at least some funds. So it's going to be a third party, either repayment or return of funds claim. So when you're claiming for match, it's going to be a third party. It's going to be a third party claim. If you are returning funds, it's going to be a third party, either repayment or return of funds. Repayment is what you will use if you have claimed funds for a participant and they have dropped out of the program or they've been reassigned and you want to reuse those funds. So let's say you sign someone up and they, maybe they get like $200 or $300 in match and it's like a year into the program. And then they realize they can't do it. They're moving to Michigan and you've got to close them out. We're going to take those $300 back and you have a whole account slot then that you'll want to refill. You'll want to reuse that $300 that you sent back to us. So you'll want to make sure that you send it back as a repayment claim. Return of funds is what you'll want to do at the end of your program round, or if someone has graduated from the program and they've used some of their funds, but maybe not all of them, not enough where you can support another account with the funds. So return of funds is what you want to do with those funds, and those are funds that you won't be able to reuse. So that's why you only really want to do this claim, but probably at the very end of your program term. So for anyone that's doing 2015, any funds that you're returning in the next 2 to 3 months, you'll want to do it as a return of funds claim. But if you're returning funds on, let's say, like 2019 right now, you'll most likely want to do that as a repayment claim because you'll probably end up wanting to reuse those funds in the next couple of years. So again, you'll want to use the account closeout form that both you and the client will sign. It'll be taken to the financial institution so that they can release the funds, and the funds will get, the savings from the participant will get released directly to them. You'll want to update that transaction happened on Outcome Tracker, and then have a copy of the closeout form in their file, both in their physical file and in their Outcome Tracker file. For returning the funds to IHCDA, again, you'll use that account closeout form. You'll just need to use the form once, and it'll send both the savings to the participant and the match back to us. So you'll want to complete the form, send it to the financial institution, and then right around that same time, you're going to want to submit a claim in IHCDAONLINE for either the repayment or return of funds. And have that be done within a couple of days of submitting that closeout form to the bank. You'll save a copy of the receipt from IHCDA Online. Enter this information into Outcome Tracker just so that it can know the account's being closed out and the funds are being returned. And then very important, you'll want to email the IDA email to let us know that the return of funds or repayment is happening. You'll want to send us the closeout form and the claim receipt. This is incredibly important because when we get checks from banks, it's a lot of times just a check, and it will just say the bank and it might say IDA on them, and then that's it. That's all we know. We don't know who it came from. We don't know what award it's for. We don't know if it's for one participant, multiple participants. We don't know. And if we don't know, especially if we don't know what award number it's under, we can't cash it. And that's not a good thing. So make sure that that we have the information we need for that by emailing us, letting us know the check is coming and which award it goes with. So that way, if we have that information, we can cache it pretty quickly. And again, place all documents that you have from this in the participants file. Okay, any questions on any of that? Oops, see one automatically. So do you email if you do a repayment? Yes, because any money that you are sending back to us is going to come to us in the form of a check, usually. And again, if we don't know what it's for, what award it's under, we can't do anything with it. And unfortunately, that can be extended for several months, if not years. So we want to be able to cash those checks pretty quickly, want to be able to clear out that account, have it be closed, give you access to those funds. If we can't cash a repayment check, you're not going to have access to those funds. So for a repayment or for a return of funds, make sure you're letting us know so that when we get the check, we know what to do with it. Okay. And yes, when you send that to us, give us the claim receipt, and so we can find that really quickly. That is the easiest way for us to be able to understand what to do with a check. If you give us the claim receipt, we can tell our claims department, here's the check and here's the claim that it matches, so that you can close out that claim and make the funds available to the administrator. But at the very least, we need to know what award it goes under. Okay, so anything else that you need to know? There's a couple of things. Account closeout and your grant closeout are very, 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 very important. We still sometimes deal with accounts that were opened in like 2005, 2009. I think when I first started at IHCDA, I had to deal with one that was open in 2001. I don't even think IHCDA was the one running IDA at that point. So we want to make sure that whenever an account needs to be closed, that it is closed. And that is especially true when your grant term ends. So right now that is June 30th, 2024. All your purchases need to be made, all of your accounts need to be closed. Now you have 45 days after that grant term for the closeout period. So if you need a little extra time closing the accounts, that's fine, but all purchases need to be done by June 30th, 2024, and preferably all accounts would be closed by then as well. Really, you should only be making admin claims for any of your final work that you did, let's say like June 28th, 2024. That's why we give you some extra time to make those claims for your admin expenses. Really, any program activity be done by June 30th, 2024. Write that date down. Make sure you don't forget it. Make sure your participants are aware that that is their absolute deadline. You might be working on a deadline that's a little bit sooner with them. You think you can get them through the program in, let's say, 2 years or 2.5 years, that's fine. But their absolute deadline to be done is June 30th, 2024. It's also important that you are keeping up to date on Outcome Tracker. As I mentioned, we're starting to go through that program, and we will be providing some training on it based on what we've been seeing folks add to it in the last for some of the last awards. But it's really important that you keep this up to date, including showing that accounts are closed and that all the funds have been returned. That's the system that we use to pull reports to show what's been done in 2016 with 2016 funds, what's been done with 2019 funds. And so if that information isn't up to date on your end, our reports aren't going to show the correct amounts. So we're trying really hard to make sure that that is up to date, and we are using your claims tool, what you are submitting every time that you make a match claim. That is what we use to monitor Outcome Tracker and make sure that both our claim system and Outcome Tracker match and show the same or at least similar information. Okay, so we're getting to the last couple of slides, which is good. We've only got 15 minutes left. The manual, we try to keep the changes to a minimum, but I would say some of the changes we made this year are pretty important changes. So like I mentioned, there are no hourly requirements for education anymore. That goes for all program rounds, not just 2020. For 2020, there's no longer a limit on vehicle purchases. I believe it used to be like, what was it? 1/3 maybe of your accounts could be used for vehicle purchase. That's no longer, there's no longer a limit, but that is just for 2020. Now, if you all are interested and you want to be able to have more vehicle purchases on earlier rounds, you can let us know and we can consider adding that to future guidance to allow you to do that. But for now, that rule is just for 2020. Also just for 2020 is the new additional $250 for admin. But the admin's based on participant success. Again, the $500, which you've always had access to, is reimbursement based. It's based on how much time and how much time your staff are spending on IDA and what you are purchasing in terms of materials. And it is not based on how many accounts that you open. It's just based on how many accounts that you were awarded. This extra $250 is based on the accounts that you open, and in particular, the accounts that have end up with a first purchase and the accounts that use at least $4,200 in match. We did update the eligibility section so that you don't necessarily have to do income verification for every single, or I should say, you don't have to do a full intake with income verification for each participant. If you have a participant that can prove they are in another program that has the same or more restrictive eligibility requirements, you can use that as proof that they're eligible for IDA. I know a lot of you run multiple programs in your agencies, and so if you're able to either share that information, or if your participants receive an award letter from one of those other programs and they can show that to you, then that's fine to use as income eligibility. I would say though that should just be for the 200% income limits. You'll most likely still need to see proof of earned income, since that's not usually called out specifically in most other programs. This is a small change, but one that was important to me. I'm phasing out the term fast track from this program, at least when it comes to talking about a participant that finishes the program quickly. We used to refer to that as someone who's going through fast track. We also use that term for specific awards, though, that we awarded in previous years. So we had two different fast track terms that we were using. So it's the same term for two different things, which annoys me. So moving forward, I will be referring to anyone that can that is or can finish the program in 2 years or less as doing IDA on an accelerated rate or accelerated track. So hopefully it makes things a little bit more clear. And then finally, we did expand the section on how to handle beneficiaries. And what to do if a beneficiary is a family member versus not a family member. I found it was a little bit lean from previous manuals. So even if you are not a 2020 administrator, if you are dealing with a beneficiary situation, I would encourage you to read the 2020 manual and go off of that. I don't think it necessarily changed any of the old rules. It just expanded on them and hopefully made things a little bit more clear and easier to follow. And then finally, in addition to the manual, we have quote appendix that used to be a zip file that we would upload to our website, and then you would have to download it to get access to any one single document, which I found annoying. So that is no longer the case anymore. We have actually deleted all of the appendices on the IDA webpage, and we have listed all of these documents that you see on this slide are listed as individual documents on our website. So if you just need a participant application, you just need to you can download just that document from our website. And we've tried to update everything so it's no longer year specific. So even if you are a 2018 administrator and you need an application or a savings plan agreement, then you should be able to use a document that is listed currently on the IDA webpage. Now, one thing that I am adding to the webpage that isn't, I believe, currently on there are applications and is the purchase withdrawal form and the account closeout form. Right now, they're the ones that are listed can really just be used for the state programs for 2018, 2019, 2020. I have requested that additional forms be uploaded that can be used for the 2015 and 2016 rounds, because those forms need to have federal information on them that are not on the current forms. So there will be even more forms being added to that section. So if you're one of those administrators, know that those forms will be uploaded very soon. In addition to the required documents that you need to use for the program, we also have guidance listed on the page under its own section. And again, I highly recommend that you read all 4 of those, especially the most recent 2, especially the COVID one, because that is the one that has loosened some of the rules that we have in our manuals about how long it takes to collect an application, what you need to have signed. We've made it a little bit more flexible so you can meet the needs of your participants in this time. And that guidance is in effect while the while the governor's executive order on the emergency is still active, which I believe it is, I believe for another week or 2. And then if that is allowed to expire, that guidance will then expire and you'll have 60 days to get back into the regular processes. And then finally, we also have some resources, our list of IDA trainings that other administrators have suggested, an outcome tracker webinar, a list of all of you, our administrators, our guide to IHCDA online, and then the last thing we have is a zip file of just other resources that we have collected throughout the years, but that I don't necessarily get a ton of requests for, so I didn't feel the need to make as easily accessible as some of these other documents. And so with that is the end. I see I've got a couple of extra questions. Yes, so I have a question. Does EAP count? Assuming that their income limits are the same or less than IDA, which I believe they are, yes, I would say EAP, you do have to do a full intake. At least as far as I know, you have to do a full intake for every single participant. So as long as those income limits stay at or below the IDA limits, then I would say yes, that you can use EAP for I would say specifically for the 200% household income eligibility question. You'll probably, again, still need to collect some form of proof of earned income. And then last question is, will these slides be available? Yes, I will probably make these slides, I'll probably email these out hopefully directly to all of you right after this, and then we'll post it on our website along with a recording of this. I believe this is being recorded, and if it is, I'll make sure that that recording gets posted to our website hopefully by the end of this week. Okay, I'm not seeing any other questions come up. Again, if you ever have any questions or concerns, reach out to us through the IDA email. We are also on Teams. If you are not using Teams and you're interested in using Teams and getting access to that system, which I highly recommend, I think it's a really great resource, please let me know and I can get you access to that. And I let everyone who was on the call last week know we will move our regular IDA network calls. They were every other week. They're now going to go to monthly. So we had our first one for August last Friday, and we'll be having the next one in the first Friday of September. But I'll be sending updated invites for those and the call information sometime the next week or 2 as well. With that is everything on my end. I'm not seeing any other questions, so I'll go ahead and end a couple of minutes early. That's always exciting. Question on outcome tracker. Do the agencies close out participants or do you? The agency. So if you have a participant that is closing out, you'll need to update their account information to show that last transaction or transactions, that their personal savings account was cleared out and now says 0, and that their match savings account was cleared out and now says 0. And then I believe there's really just one checkbox maybe a checkbox for each account that says it's either it uses that account is active or inactive, or account is active or closed. And so you'll need to click that to show that the account is now either closed or inactive. I'm not familiar with the exact terminology, but yes, you will need to show that the account is closed. Otherwise, when we pull reports, it will show on our end that they are still open, even if they were supposed to be closed like 5 years ago. But all right, not seeing any other questions. I'll let you all go about 5 minutes early. Thank you all for joining today. And I look forward to continuing to work with you and have more IDA discussions with you in the next couple of weeks and months. Have a good rest of your Tuesday, everyone.